Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Facebook under scrutiny again. A new report reveals CEO Mark Zuckerberg may have been aware of problematic privacy practices. Plus, CrowdStrike makes its public debut, but shares fall in the first day of trading. We will hear from the cybersecurity firm's CEO. And China's unicorns tapping global lenders. But in the midst of a U.S. trade war, is it a risk to investors? First, to our top story, Facebook shares took a hit earlier today after the Wall Street Journal reported CEO Mark Zuckerberg knew about the social network's problematic privacy practices. Facebook uncovered emails in the process of responding to a federal privacy investigation, the Journal reported, raising concerns that they would be harmful to the company if they became public. The Journal says that was part of the reason the company sought a quick settlement. To discuss, we are joined by Bloomberg Opinion Shira Ovide, and here with me in San Francisco, Bloomberg Tech Executive Editor Tom Giles. So Tom, explain the nuts and bolts here of what the Journal is saying that Facebook uncovered.
Right. So they're referring to an email exchange, which, by the way, they haven't seen the emails, according to the report, and we certainly haven't. We don't know where they got them. But apparently there was this exchange back in 2012, around the time that the FTC was handing down this consent decree punishment about Facebook and its privacy practices. And at the time, there was an interchange among a couple of employees at Facebook, including Mark Zuckerberg, about certain types of information on millions of Facebook users that were available on this third party's app, available to its users. And the question went along, something along the lines of, is this possible? And is there anything that we should do about it? And then, the exchange went on after that. But again, it raised questions about what did Facebook know? What did Mark Zuckerberg know? When did he know it? Did the company take adequate steps to deal with privacy concerns on the data that was leaving the platform?
Now, based on my read of the Journal's reporting here, there's also an indication that this happened around the time of the FTC consent decree that Facebook agreed to abide by, right, and indicated that perhaps abiding by that decree or following those new orders was not a priority for Mark Zuckerberg. However, a spokesperson for Facebook said in a statement today, at no point did Mark or any other Facebook employee knowingly violate the company's obligations under the FTC consent order, nor do any emails exist that indicate that we did. So, Shira, how do we make sense of that?
Look, the issue is this is why companies settle litigation, or they settle internal investigations and regulatory probes. That inevitably what happens whenever somebody goes crawling around an executive's email inboxes is that things come out that may not reflect well on those executives. We've seen this over and over again, including in the case of Facebook last year, regulators, lawmakers in the UK released this kind of selective disclosure of, again, emails and internal documents from Facebook's earliest days that did not, again, paint Mark Zuckerberg in this flattering light, that he appeared to be this kind of very money-grubbing sort of executive who cared much more about Facebook's bottom line and growth than he did about protecting users. And so, again, we've seen this movie before where emails can be released that, at least without additional context, may not look great for these companies, and that's why we may see Facebook settle this FTC case, as they may do other similar cases.
Well, and the FTC does have the option of taking Facebook to court, but as I understand it, that would be a little bit more risky for both sides. They might get less. Facebook, meantime, has said they've set aside $5 billion for a settlement here, and we've been waiting for news about this settlement, but it hasn't happened yet. Tom, what is the latest on that? Right.
They've set aside $5 billion, which I hasten to add is chump change for Facebook, which is, throwing off billions of dollars. Is that enough of a penalty? And are there people in the government, in the regulatory side of the Trump administration, who are saying, well, that's not enough? And so we do have to kind of ask the question of, do we have evidence? And and we don't know where it came from, but do we leak it to the Journal or other publications that might, as Shira pointed out, portray Zuck and other people at the company in an unflattering light and raise questions about whether the 3 to 5 billion that we think they might be fined is sufficient? Should we go to this to the place where we ask them to change their practices and extract a bigger chunk of flesh from Facebook?
Meantime, Shira, the punches keep coming. There has been another faked video posted on Facebook, this time of Mark Zuckerberg in the style of the Nancy Pelosi video. Facebook has decided not to take it down. Meantime, Mark Zuckerberg has reportedly called Nancy Pelosi a couple of times, but she has not returned his calls, so the plot thickens.
It does indeed. I mean, look, all this goes to show that the only bipartisan issue in Washington right now is hating on big tech companies, Facebook most of all. And we've seen this from Nancy Pelosi. We've seen this from Donald Trump, who, again, in recent days has said that, yeah, we may need to take a look at the monopoly power of some of these big tech companies. And also he said that Facebook and Google and other tech companies, they suppress conservative voices. There hasn't really been evidence of that. But again, you've seen on both the left and the right sides of the political spectrum in the United States that Facebook is not popular.
So, Tom, what's next?
Well, we're waiting to get the consent decree. We're waiting to see what the settlement is going to be, what kind of fine is going to come down. We're also looking at what, this division of big tech between the DOJ and the FTC. What does that hold for us? DOJ, it sounds like it's gearing up for some kind of a probe of Google. DOJ also will have, oversight of Apple. FTC's got Amazon and Facebook. So lots of potential for headline risk to these companies in the months and weeks ahead.
All right, we're keeping close watch on the very latest. Tom Giles, Shira Ovide for Bloomberg. Thank you so much. Meantime, on Wednesday, SpaceX launched the RadarSat constellation mission carrying Canada's new generation of Earth observation satellites. The Falcon 9 rocket and payload rumbled aloft at 7:17 a.m. local time Wednesday from foggy Vandenberg Air Force Base on California's Central Coast. The 3 satellites began to deploy about 54 minutes after launch. SpaceX recovered the rocket's first stage at a landing zone on the military base. Coming up, the year of the tech IPO continues. We will talk to CrowdStrike CEO George Kurtz about going public next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. The year of tech IPOs continues. Shares of cybersecurity company CrowdStrike soared in their first day of trading, the stock jumping as much as 97% at one point in the session. CrowdStrike raised $612 million in its IPO, giving the company an $11.4 billion market cap. Still, like many recent tech IPOs, CrowdStrike is unprofitable. It reported a net loss of $140 million on revenue of $250 million over 2018. Let's bring in CrowdStrike CEO George Kurtz, who joins us now from the NASDAQ in New York. So, George, congratulations. It's a volatile market, so the pop in the stock is welcome. What made you decide, given all of the issues, a lingering trade war between the U.S. and China, for example, that now was the right time to go public?
Well, I think at CrowdStrike, we really focused on going public when we were ready. And from our perspective, we've always taken a long-term view. And today is one day where we raised a financing round, and we're going to continue to focus on the future. So I think we should look back at today and celebrate it. But tomorrow we're back at it and focusing on customer success and preventing breaches for large and small companies around the globe.
How much are you following what's happening globally, and how much exposure do you have to China?
We don't really sell in China, so that hasn't really affected us. I think from a China perspective, we typically see a lot of activity around geopolitical tensions, and that activity tends to manifest itself in cyber attacks. So with some of this unrest, we continue to see nation-state attacks. And again, why we started the company was to really help organizations around the globe prevent against these determined adversaries and nation-state actors.
Well, and certainly what's happening with the U.S.-China trade war is impacting U.S. companies. The cybersecurity landscape continues to change. The threat landscape continues to change. How do you stay competitive in an ever-changing world?
Well, a big part of our success has been the fact that we've really built a cloud platform. And in security, there really hasn't been a security cloud. If you think about ServiceNow, Workday, and Salesforce, there's been no equivalent platform company. Part of our overall approach has been to collect a lot of endpoint data, security threat information that's driven a lot of the artificial intelligence algorithms that we have. And the more data we consume, the smarter our technology tends to get in identifying breaches that have never been seen before. So that's a big part of the overall story, and I think what we focused on is really that platform approach as opposed to building yet another point product, and that's resonated well with our customers.
So what are the biggest trends you see on the horizon, given that we're going into the heat of the U.S. election season, and the last U.S. election was most certainly not secure?
Well, whether it's elections, whether it's intellectual property theft, or whether it's destruction from ransomware, these are all cyber threats that organizations of all shapes and sizes actually have to deal with. I think what it does underscore is just how vulnerable companies are, organizations are, non-government organizations to these sort of cyber attacks. And unfortunately, they've been burdened with legacy technology that has been incapable of identifying these breaches. And again, that's part of what we really focused on, is building technology not only to stop malware, but the broader issue is actually stopping breaches.
So what trends are you seeing in company decision making? Are companies rising to this rising threat? Are they as protected as they should be, or are they more broadly still very vulnerable?
I think more broadly, they're still very vulnerable. And unfortunately, there's a tapestry of security products that they've been using in the past that, again, haven't given them the visibility or the protection that they need. From an awareness perspective, the good news is boards of directors are taking this very seriously. This is a board issue, a risk issue. And when you look at some of the attacks that we've seen a few years back, like NotPetya and WannaCry, where ransomware literally took companies off the map for many weeks and in some cases months on end, it moved from just purely being infected to, wow, this can be a systemic risk for our corporation. Worst case, they're spending hundreds of millions of dollars in trying to recover their company and bring them back to health.
Meantime, we reported that Cisco held talks with CrowdStrike about a possible deal about 6 months ago. The deal didn't happen. Why did you decide that the right course was staying independent?
Well, I can't comment on rumors, but our goal has always been to be an independent company, and I think we've built the company, we've operated it as if it was a public company when we were private, and I think our growth and our financials are, again, of the size and scale of what a public company should be. So we went public when we wanted to, and I think we've seen a warm reception today from institutional investors.
All right, George Kurtz, CEO of the now publicly traded CrowdStrike. George, thanks so much for joining us on a busy day. Coming up, the FCC has been debating its own ban that could stifle Huawei. But can the Chinese telecom convince them they're not a threat? That's next. This is Bloomberg. Last year, FCC Chair Ajit Pai weighed in on U.S. efforts to ban Huawei. Pai suggested his agency may prohibit subsidized telecom companies from using Huawei equipment. Huawei has now responded, telling the FCC in a filing that banning particular vendors on grounds of national security will actually do little to or nothing to protect the security of America's telecommunications networks. To discuss in Washington, we've got Bloomberg's Todd Shields, who covers the FCC. So, Todd, how big a deal is this potential action from the FCC?
It would be a big deal in U.S. domestic terms. This is a prominent proceeding over at the FCC. It's one everybody can watch. We can see the filings by companies, by national security experts. It's a little bit of a bellwether in that sense. In terms of Huawei's business, not huge. They supply maybe 40 or so U.S. small rural providers. In terms of the small rural providers, big deal. They use Huawei equipment, and they need to continue to do so or face perhaps ruinous bills.
Does Huawei have a point in that changing out the equipment could actually make U.S. networks more vulnerable rather than less?
That point's a little obscure to me in their filing. They'd be buying presumably somebody other than Huawei. Perhaps the point that Huawei's making there is that it would undermine the performance of those networks. And they point to some rural providers saying, look, if you make us shut down our Huawei equipment, we may lose network performance, so it'll be hard to summon first responders when you need them, emergency services, things like that.
So when will the FCC make a final decision on this? Obviously, there are a lot of simmering and lingering issues around Huawei.
This is interesting. No date set. Ajit Pai, the FCC chairman, was at Congress today and was asked, what will you do if Mr. Trump decides to resolve the Huawei question as part of the trade deal? Pai said he'd still be strong on national security. The FCC would remain strong on national security. Didn't tell us when there might be a decision, though, or what exactly that decision might be. So it looks like maybe they're delaying, waiting for some of the other things that are floating around here, around this big issue to resolve.
All right, Bloomberg's Todd Shields, thanks so much
Thank
for
you.
that update. I want to continue this discussion now on the security of 5G networks and Huawei. Our next guest in New York, we've got Deborah Golden. She's a principal at Deloitte and was just named the new leader of its U.S. cyber practice. And in Washington, we've got Mark Testoni, CEO of SAP National Security Services. So, Mark, I'll start with you. What is your take on the ratcheting up of U.S. action on Huawei while we are still waiting for the UK government to make a determination about whether to use Huawei in its networks at all?
Hi, Emily. You know, the geopolitical underpinnings of 5G are pretty interesting. The reality is the U.S. government feels that some companies in China, because of the strong leadership or ability to influence these companies and what they do, potentially could create problems in some of the hardware that they provide. So, I mean, this is a dialogue that's really been going on with Huawei since 2012 and the House Intel Committee report related to it. So this is just a natural continuation. Underneath all this, you have the larger issue of the dynamic between the U.S. and China and who's going to control and create, have the most influence on information in the future. And 5G is central to that. And it really is the next generation of the Industrial Revolution, or as some call the fourth generation of the Industrial Revolution.
Deborah, is the U.S. government making the right calls on Huawei, given the importance of the future of 5G?
Yeah, and I think incredibly well said that, when we look at 5G, it is the combination of industry and automation. And when you think ahead of all the types of data, all the different ways that we could be looking at the information that's coming in, it's billions and trillions amount of information, whether that's through facial recognition, video, technology, artificial intelligence, just the sheer amount of data. Definitely you're going to have a harder look at the types of cyber activity that's occurring and the threats that may be occurring around that data.
Now, Mark, let's talk a little bit about 5G in general and where, if not Huawei, the market will be concentrated. If not Huawei, what are the companies that will be running 5G networks? Whose equipment will be embedded in these networks around the world?
Yeah, Emily, it's a great question, and I think it's somewhat misunderstood. There are really three kind of end-to-end hardware or infrastructure telecom providers, Huawei, Ericsson, and Nokia, that can do kind of end-to-end. But we then have a bunch of device manufacturers, and we also have all sorts of other players. For example, a lot of the chips that go inside these networks are U.S. company Qualcomm. So really, if you go away from Huawei as the kind of the core provider, a lot of it would either be Nokia or Ericsson, potentially a combination of others. But what's really important here is what 5G brings us. I mean, this is a huge change. Deborah alluded to some of this. I mean, we're going to be able to enable robotics. We're taking data that had been centrally kind of managed in the earlier generations of the internet, and we're spreading it out to the edge. And there's going to be a lot more related to security associated with that, and also opportunity around security. So, I mean, this is really going to change the way that we operate business and we as humans operate. Much like 10 years ago when we had the advent of 4G, we really didn't realize what smartphones were going to be like. We're going to have similar things here. So I think there are plenty of providers. I think the market will rationalize itself in many ways, but it's interesting to note that primarily these are offshore providers. The U.S. doesn't really have a major player in that core back end, but we do have the key telecommunication companies and many other players in this business as well.
Meantime, Deborah, as the world becomes more connected, as we move towards 5G, whoever's equipment is running it, there's a huge gap, talent gap, in cybersecurity. How big is that gap, and what's being done to fill it?
I mean, the gap just continues to get larger. I mean, as was mentioned, the ideas when you think about supply chain, third-party risk management, we no longer have to look at just cyber inside the four walls. Cyber truly is everywhere. It's in everything we do every day. It's in the business. It's in our organization's missions. It's everything that we do. And so when you think about the cyber workforce and the talent and where we're going to have to look to source individuals to help us solve these problems and these challenges, we have to start looking broadly and creating new ecosystems, looking at K through 12 programs, looking at how to align with universities and joint venture and venture capitalist organizations to really try to find and identify new and distinct ways to really be quite disciplined in the way that we look at finding these workforce.
Now, Mark, what direction do you think we're going? I mean, obviously, the U.S. is cutting off Huawei. That could mean China will cut off U.S. and foreign suppliers as well. We're seeing moves by Russia to create a sovereign internet. Is that the trend? Isolationism, at least digital isolationism, globally over the next decade?
Well, let's not confuse the prism of 2019 with where we may be in 4 or 5 years, Emily. I think that's critical to understand. I mean, ultimately, we've created a global internet, and we will always have these connect points regardless of who provides what capabilities. And security is really about the data. Deborah talked about the types of things, facial recognition. It's really about protecting the data. That's what we do today in 4G. So we're going to go, there will ultimately be resolutions from a standpoint of where we can work with the various architectures and infrastructures. But the security opportunity around 5G is also great. It is a huge opportunity, which is why you see companies like CrowdStrike, which you had on, going up so much on their first day of an IPO. So there's going to be a tremendous amount of business opportunity. I think someone estimated something along the lines of $22 trillion worth of impact globally in the next 15 years. I mean, this is a significant move. Yep. So we'll figure all this out, I'm confident.
Okay, SAP's Mark Testoni, Deborah Golden of Deloitte, thank you both. Okay. Coming up, Hong Kong falls into chaos as citizens protest a China extradition bill. But what does it mean for investors in the region? And we're live streaming on Twitter. You can check us out there at Technology. More coming up next. This is Bloomberg. Technology. I'm Emily Chang in San Francisco. In Hong Kong, chaos in the streets. Thousands of protesters have been demonstrating against a proposal to allow extraditions to China, swarming government centers. They've thrown bricks and other objects at police, officers responding with pepper spray and water cannons. This has all led Hong Kong's Legislative Council to postpone debate on the extradition plan. Critics say the measure would blow up the legal wall intended to keep Hong Kong's justice system separate from China's. So what does the unrest mean for China's business climate, especially at a time when Wall Street is lending billions of dollars to China's hottest tech unicorns? To answer that, I want to bring in Bloomberg's deals reporter Crystal Z in New York. She's been reporting on why exactly U.S. banks are currently interested in China technology. So obviously, Crystal, there's some sort of payoff here, but have you sensed any amount of cooling in the willingness of investors to lend money to Chinese tech companies in the midst of not just these protests, but obviously a U.S.-China trade war?
We're seeing quite the opposite, in fact, in the private market. We have seen that the technology startups in China are tapping the syndicated loan market in a really unprecedented pace. A lot of the Wall Street banks are taking their U.S. playbook into China, lending these startups billions of dollars in hope that they would get further mandate in the future, such as IPO and equity follow-on offerings. Well, what we're seeing from this particular protest in Hong Kong did have some impact on the market. We have seen that trade has caused some of the IPOs to pause. They have decided to wait until the environment clears up. It's still unclear. No deal has been pulled because of this extradition protest, but we should monitor very closely whether these companies that will be looking to go public in the next 3-6 months will change their mind or have any sort of other contingency plans.
Now, these companies may have a lot of potential, but they're asset light, they're unprofitable. So what is the attraction for investors?
Investors are really looking for high growth when they look at Chinese tech companies. That's generally the theme for tech and China. As you said, these are asset-light companies. They don't really have a track record of profit making. But it's not really an unfamiliar notion because it's happening in the US for a long time. I think Wall Street banks are really looking at this as this really good opportunity to build relationship early on with these companies, and in hope that further down the road when they go public and become like $1 billion company, they will get the mandate for more lucrative fees.
So give us some examples of specific deals. For example, your story, you mentioned ByteDance, certainly a big and growing company, but also a company that's run into challenges specifically with the U.S. government.
Yeah, so there are several companies that have raised big loans in the past. You mentioned TikTok, which is a really popular streaming app. They have raised billions of dollars, and that includes a lot of big names in that deal, including Goldman Sachs, Morgan Stanley. We've seen that some auto financing deals, such as Guazi.com, they've all raised big tickets. I guess what this is probably the trend to be, instead of raising private equity where you would dilute investors at a lower price, you're raising private loans instead. So you keep that valuation and you still achieve the goal of raising funds for further growth.
We've seen many U.S. tech companies wait to go public, wait many, many years to go public. Is that the trend with Chinese tech companies as well?
It's increasingly going that way. TikTok has been TikTok's mothership. ByteDance, they've been talking about raising fund, but nowhere close to being public yet. We've seen the other big unicorns, such as Alibaba's financial affiliate Ant Financial. They have been private for the longest time. So these are the really big leading tech companies in China. They're really taking their time instead of rushing to the public market like their other peers in China.
All right, Bloomberg's Crystal Z, thank you so much for your reporting there. Meantime, Wang Gang, China's father, so-called father of electric cars, says hydrogen will be the next big push for the Chinese government. Wang spoke exclusively to our own John Liu and talked about what the ultimate goals are for the EV market.
The market is huge. The key is to sort out the factors that have been hindering the development of fuel cell vehicles in the most appropriate markets. We should establish a hydrogen society. Compared to the hydrogen society, the electric society has been established. But it would be a process for the hydrogen society to be established. Next step, we will promote the adoption of hydrogen vehicles in selected trial regions instead of all over the country. We will work on setting up the whole system, including hydrogen production, storage, transport, and refueling, as well as a car transportation network.
Based on China's energy structure, having no oil, based on pollution in cities being a problem, do those two things add together to make fuel cells the best option for China in the future?
What I want to stress is that it's not only fuel cells, it would be electric as well. The electric and fuel cell cars are both important. They have their own focuses. For example, in cities, people prefer to take electric cars, while intercities, people prefer fuel cell cars. They are based on market segmentation.
Do you think it's possible that some of the achievement, the progress that China has made in developing its new energy vehicle industry, that somehow prompted the U.S. to be a little bit more concerned and to want to do things to try to contain China's development?
Of all the American and European friends I've been in touch with, there isn't anyone who believes there should be concern because of China's development. They, in fact, think if China doesn't develop, then that is a big problem. Coping with climate change is our common responsibility. We must recognize that we are one of the world's largest emitters of carbon dioxide. We have a responsibility to reduce emissions. We have a responsibility to contribute to ecological civilization, which is why we have been working hard in this area for more than 5 years.
But last year in China, the sale of new cars in China fell for the first time in almost 30 years. Do you think that was an important signal for development?
Actually, I think it's a natural phenomena. Just like you mentioned, the core issue of this phenomena is that the problems in the markets haven't been solved. It's because it's those problems that made the market hesitate and fall. At the same time, the sale of new energy cars has increased nearly 60%, which is very fast growth. If there was a signal, it tells us that we need new energy cars.
That was China's former science and tech minister, Wang Gang. Meantime, Bloomberg has learned that Google is speeding up the shift of hardware production away from China. This will allow the company to avoid U.S. tariffs and an increasingly hostile government in Beijing. Google has moved much of the production of U.S.-bound motherboards for its computers to Taiwan. Coming up, Slack is gearing up for its public trading debut next week. What investors are expecting from the company's untraditional listing next. This is Bloomberg. Electric scooter startup Bird said Wednesday it will acquire rival Scoot. The deal helps Bird move into San Francisco, where officials rejected the company's license application to provide rentals. Scoot is one of the 2 scooter companies that were granted permits to operate in the city. The companies didn't disclose an acquisition price, but said Scoot will operate under its own brand as a Bird subsidiary. Slack is expected to be valued between $16 and $17 billion when it lists its shares publicly next week. That's more than double the company's last valuation in August. Unlike many tech companies that have gone public this year, Slack is foregoing the traditional IPO route with a direct listing, and investors will be allowed to begin selling shares immediately. Joining us to discuss, Bloomberg's Ellen Hewitt. So who's targeting a $16 or $17 billion? Is this being floated by the bankers? Is this coming from the company? What does that mean?
It's coming from people familiar with talks about the deal as they're getting ready for the direct listing next Thursday. And so we don't specify with whom, but yes, obviously the people involved is the company, the investors, the bankers, people who are thinking about how much is this company going to be worth when it lists next week. And what's interesting is they're doing this math for the $16 to $17 billion valuation based off of some projections about the company's expected revenue for next year. So they're looking at this year's projected revenue, the expected growth rate, and forwarding ahead to fiscal year 2021 because of the way their fiscal year calendar works, and expecting basically a 20 times valuation or 20 times revenue to make the valuation.
Well, this sort of brings to mind the headline in which Uber was targeting a $120 billion valuation, which, as I understand it, was floated by the company's bankers and perhaps had nothing to do with actual demand. So that was far out from the IPO. We're now 1 week away from Slack's IPO, so this feels very specific.
This is going to be a little different, I think, simply because it's a direct listing rather than an IPO. My understanding is that in an IPO, there is a little bit more control over where the banks and the company and everyone is going to agree that the company will, or that the stock will open at, right? They'll set a price and they'll sort of set some boundaries around that. And with a direct listing, it's a little different. What's going to happen is at some point there's going to be a reference price that's going to come out, either I believe from the exchange or the banks. And as we saw with Spotify, which did a direct listing last year, that reference range for the price was quite large. It was, I think, somewhere between the $40 per share up to like $130. So pretty wide. It's not very specific. And then what happens on the morning of trading is the exchange and the direct market maker, which in this case is Citadel, will collect, buy, and sell orders from a bunch of different, groups, and then try to figure out, based on those orders, where to open trading. And that may take several hours.
So the skeptics say that Slack's financials don't appear to be as positive as, let's say, Dropbox or DocuSign, when both of those companies went public. What's the response to that?
Well, Slack has not been talking a lot. They've been in a quiet period, but it's true. If you look at Slack's growth rate, or the growth rate of its revenue, it has been declining over the last few years. So what's interesting is when we talk about the forward projections for the valuation of the company, they're based off of an assumption that the revenue will grow 50% next year, because they've just seen that it's expected to grow 50% this year. But if you look at it, it grew somewhere in the 80% the year before and over 100% the year before that. So it's actually been declining. So it's unclear, I think, to investors and to people who are observing and deciding whether to buy this stock, whether the growth rate that Slack saw in some of its earlier years is going to continue on at the same rate.
Now, because they're doing a direct listing, it means investors and employees, right, can sell their shares right away. Should people buying into this company for the first time be worried about a talent exodus if employees can now suddenly cash out?
I think, we've already seen that there's been some trading happening on the private market ahead of time. It's been pretty consistent with the expected price for the valuation of the listing, so somewhere around 16 to 17 billion. And the volume has been, I think, as expected. So I think people are looking at that to get an indication of whether people are expecting to sell a bunch. I think with Spotify, if you looked at the first few days of trading, there wasn't a lot of volume. And I think in the end, people are probably going to have faith that Slack is, a company to be held in the long term and are probably not going to have a big sell-off. But you are right that investors and employees, unlike in a traditional IPO, can sell the first day of trading.
Spotify was very quiet on the day of its direct listing. Do we expect to see Slack executives in New York on the floor of the exchange celebrating?
I'm not sure yet if there's going to be banners and all that, but Stuart Butterfield, the CEO, will be in New York. They will be, I believe, doing something that morning on the New York Stock Exchange. And I think overall, when you talk to experts about what they expect and what they hope would be a win for the Slack IPO, or the Slack direct listing, I think no news is good news. If it's quiet, if it stays pretty stable, if there's some trading and nothing crazy happens, it'll probably be seen as a pretty big win.
All right, Ellen Hewitt, thank you for your reporting, and we'll be watching for your reports over the next week. Just a reminder, Bloomberg Beta, the venture capital arm of Bloomberg LP, is an investor in Slack. Still ahead, lawmakers and business leaders head to London this week for Bloomberg's Sooner Than You Think conference. We will discuss the future of London's tech scene as the city looks to redefine its relationship with Europe. Next, this is Bloomberg. Netflix is the latest tech giant making its way into video games. The streaming company has announced it's working with top video game developers on games based on its shows. Stranger Things 3, the game, will come out on July 4th, the same day the show's third season debuts. And Netflix has licensed The Dark Crystal: Age of Resistance for a game that'll debut later this year. Netflix's first two games will be available on most of the major gaming consoles as well as PCs. Well, food delivery service Deliveroo is planning a major UK expansion. Last month, the company secured $575 million in new funding in a round led by Amazon, bringing its total raise to $1.5 billion. Now, the company's CEO says it wants to reach half the UK's population by the end of the year. Deliveroo CEO and co-founder Will Shu spoke with our own Caroline Hyde about the plan at Bloomberg's Sooner Than You Think Tech Conference in London. Take a listen.
In terms of what we're going to do with the money, One is just expansion in general, right? So today, we cover about 1/3 of the UK population. By the end of the year, we want to be at 50%. And so what that means is we're going to go into suburbs, not just city centers. We're going to go to some smaller towns as well. We think that this is a universal problem, getting great food delivered quickly, and we think that it's going to resonate with a lot more people as well. And we're going to do this in other European countries as well. So that's probably number one. And then number two, we have been building an amazing tech team here in London, and we want to really, really scale that up and hire more world-class people. So that's been really exciting for us.
Let's go into the first prong of that, the expansion in terms of into the suburbs and into the smaller towns, the regions. How do you do that when it comes to, first of all, targeting the restaurants? You want to be a partner of choice, it's clear. Are there enough restaurants in these areas? Talk to us about first the relationships you're going to start with the restaurants that already exist there.
Well, there's always great restaurants in every community, right? And making sure you work with all of them, and making sure you work with just about every restaurant out there, because people have different choices. We started as a business in central London. I personally curated all the restaurants in the very beginning, and luckily that resonated with our initial customers. But I've learned over time that when you become more of a mainstream business, we need to work with all different types of restaurants and let our personalization algorithms take over, and then people will discover new foods or go to the ones they really like. So that's probably point number one. But number two, probably the third thing we're going to do with Capital is really push out our Additions delivery kitchens concept.
Remind us, what is Additions?
Okay, so Additions is basically think about it as a warehouse that's segmented into 10 different kitchens. And then what we do is we look at our data and we say, okay, we've set this kitchen up in call it off the high street area, right? And we say, okay, these cuisines at these price points we think will be really popular in this neighborhood. And then we invite our restaurant partners to take up occupancy. So what we've done is we've built a physical infrastructure layer for them, as well as a software layer where they can operate their business. And so it's their staff, it's their concept, but we're facilitating that and really allowing restaurants then to expand into new areas. So one example, my favorite example, is actually this restaurant, one of the first restaurants I ever signed up, called UB. It's on Lexington Street in Soho, so if you guys should go check it out. It's a tamaki place, so okay. They specialize in Brazilian Japanese tamakis. Long story short, we've managed to help them expand into 7 different Addition sites in the UK, and now 2 in Paris.
So you took them to France?
We took them to France, and they've been really, really doing super well in Paris. And so that's I think, it's been awesome to work with Nicholas on that.
Deliveroo CEO and co-founder there, Will Shu. Caroline Hyde also spoke with UK Digital and Culture Secretary Jeremy Wright at the conference. She asked him about the country's position in the race to 5G, given questions surrounding Huawei. This as the U.S. continues to press allies like the UK to ban Huawei from the next generation of telecom networks. Take a listen.
It's important that we do have good quality equipment. It's important that we're in the forefront of the 5G revolution. We want to do that. But what's just as important, if not more so, is that we have a safe and secure telecoms infrastructure. So what we're doing isn't focused on Huawei. It's not even just focused on China. I'm looking in my department at a way in which we can develop a system for the whole telecom supply chain that makes sure that whoever supplies us the equipment, they meet our requirements on safety and security. That's what we're working on, and we'll bring those proposals forward as soon as we can.
When will the National Security Council come to an end to its review in terms of providing?
Well, I can't say exactly when the decisions will be made, and of course you'll be conscious of the fact that the Americans have made decisions very recently that we need to take into account, which in a hugely interconnected telecoms world will have an impact on Huawei and on other suppliers of telecoms equipment. We need to work through the consequences of that before we make a decision, but we'll do that as soon as we can.
How difficult does it make it, the US decision to blacklist Huawei?
Well, I think, as I said, this is a hugely interconnected world, so you can't pretend that the decisions made in other parts of the world don't have a bearing. If components from America go into componentry which is supplied by Huawei, into the UK telecom system, then all of these things interact. So we've got to work through all the implications of these decisions, understand them, and then make our own decision. It's for us to decide what's best for the UK, but we have to accept the reality, which is that this is a hugely interconnected world.
Your background of a lawyer coming into play in a big way, I'm sure. Jeremy, talk to us about therefore the growth that we're still seeing in London, outside of London as well. And the UK has really been focusing on technology growth. How much of a distraction do you think Brexit has been and a concern to those building businesses?
Well, look, two things. I mean, first of all, you're right. This is growth that's happening across the UK, and that's very pleasing. We're seeing huge growth in places like Manchester. If you look at the report that came out today, the cities that are being talked about in the creation of these job opportunities are Oxford, Cambridge, Reading, Newcastle and Belfast. So they're all across the country. In relation to Brexit, people are concerned that when we leave the European Union, if you're in the tech sector, you'll still have access to the talent you want to bring in. And some of that talent comes from the European Union. But what will happen, of course, as we leave the European Union is we will be able to design our own immigration system. And we should do that, if we're sensible, and I hope we will be, in a way that makes sure we bring in the people we need and want. So what we're saying to the tech sector is, look, we've got this opportunity to design from almost a blank sheet of paper the immigration system that we want. Come and help us design it. Come and tell us what it is you want to see in our immigration system that will enable you to continue to access that talent.
UK Digital and Culture Secretary Jeremy Wright there. And that does it for this edition of Bloomberg Technology. Remember, we're always live streaming on Twitter. You can find us there at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.